Tata Motors recently reported its Q2 FY25 results and it missed analyst estimates. Now, this has raised some serious concerns with brokerages trimming down targets. So what exactly is happening with Tata Motors and why did it report a weak quarter? Now, first, a quick overview. Tata Motors is part of the prestigious Tata Group and stands as a key player in the global automobile space. In India, it's the market leader in commercial vehicles and ranks among the top 3 in passenger vehicles. Their portfolio is vast, from commercial trucks and passenger cars to luxury brands under Jaguar Land Rover, plus they made a strong push into electric vehicles. Now, in terms of revenue breakdown, almost 70% of Tata Motors revenues comes from the JLR segment, which is their luxury division. Now, this is followed by commercial vehicle segment and passenger vehicle segment. Now, in Q2 FY25, Tata Motors saw a decline across most key performance indicators. Sales volume dropped by 8% from the previous quarter and 11% year-over-year. The revenue took a hit too, declining by about 5.6% quarter-over-quarter and 3% from last year. Now, when we look at EBITDA margin, a measure of core profit, it was also down. So they clearly had some challenges maintaining profitability this quarter. So let's understand the reasons for the weak set of numbers. Now, coming to JLR, this segment saw its revenue drop by about 5.6% on a year-over-year basis. Now, remember, this company gets a big chunk of its revenue from its luxury Jaguar Land Rover brands. So when revenue drops from such an important segment, there will be concerns. Now, in this case, there were big 2 reasons why JLR sales and profits took a hit. Now, JLR's main aluminum supplier was impacted by severe flooding, which affected their supply chain. Now, aluminum is crucial for making JLR's premium models like the Range Rover and Range Rover Sport. So the production slowdown was a direct consequence of these supply issues. On top of these supply hiccups, JLR held back over 6,000 vehicles for quality checks, especially for models bound for the UK and European market. Now, this delayed sales even further. Now, because of these setbacks, JLR's wholesale volumes dropped by around 10% year-over-year. And when you add higher raw material costs, increased marketing spend, and warranty-related expenses, JLR's profit margins were squeezed more than any other business segments. Now, the commercial vehicle segment also took a hit due to a slowdown in infrastructure projects and reduced mining activity, which drove down demand. Now, on the passenger vehicle side, revenue contracted as well, partly due to higher discounting amid low sales value. So what's Tata Motors' outlook? Now, despite a weak Q2 with an EBIT margin of 5% in the JLR segment, management is optimistic about hitting an 8.5% margin for FY25. However, they've revised down their free cash flow target, pointing to demand concerns and greater investments. Now, although JLR did relatively well in China for Q2, the company anticipates some macroeconomic weakness in the second half of the year, which could impact performance. Now, they're also cautious about near-term demand in India, but hopeful for a rebound driven by the festive season and continued infrastructure investments. Now, in the commercial vehicle segment, management expects volumes to improve as construction activity picks up, along with higher fleet utilization. On the PV side, even though they managed to bring down inventory to around 30 days during the festival season, Tata Motors plans to be strategic about dispatching fewer vehicles to keep distribution lean and inventory levels manageable. For investors, there are several key aspects to keep an eye on when it comes to Tata Motors after their recent performance. Now, since JLR is the primary revenue driver, any signs of recovery here will be crucial. Now, management has retained an ambitious EBIT margin target of 8.5% for FY25, but meeting this will depend on cost control. So watch if the company manages to stabilize its supply chain. Now, keep an eye on JLR's demand in core markets like China, Europe, and the US, especially since headwinds in China could affect future performance. Now, the CV segment faced pressure in Q2 due to lower infrastructure activity and mining slowdowns. If these activities ramp up again, it could lead a boost in demand. Now, Tata Motors has been expanding into the EV space, which could be a key growth driver given India's EV push. Now, monitor their EV sales growth and any updates on new EV model launches. Now, more importantly, keep an eye on how Tata Motors is managing its inventory levels. Now, like most auto companies, Tata Motors is sensitive to economic cycles. Now, any signs of demand recovery, particularly during the festive season and in major economy, could bode well for future quarters. However, a macro slowdown could pose challenges, especially for higher-end segments like JLR. Also, do keep in mind that Tata Motors has approved the demerger of the company into 2 separate listed entities. The commercial and passenger vehicle business will be separated and be listed separately as TML Commercial Vehicle Limited and Tata Motors Passenger Vehicles Limited. So this is one more development you had to know. Now, having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.